Most people understand the basic concept of saving money. It's ingrained in us from a young age. We're told to put away a little bit here and there, whether it's in a piggy bank, a jar, or a savings account. But, saving alone is not enough. Stashing cash under your mattress or letting it sit idle in a low-interest account simply won't cut it if you have bigger financial goals. If you want to build real wealth and achieve true financial independence, saving is a good start, but it's only the foundation. Investing makes your money work for you, putting it into assets that have the potential to increase in value over time. It helps your wealth grow much faster, accelerating your journey towards your financial aspirations, than just leaving money in a savings account where it barely keeps pace with inflation. When you invest, you earn more than just the money you put in. You're participating in the growth of businesses and the economy. Your money can earn more money, generating a stream of income, and building a nest egg for the future, through something called compound growth, which is the eighth wonder of the world, according to some. This means your returns also start earning returns, creating a snowball effect that amplifies your wealth over time. Over time, this can add up to much more than you might expect, transforming your financial landscape. Think of investing as planting a tree, a seed of financial potential. At first, it's just a seed, a small amount of money that seems insignificant. But if you water it, give it sunlight, and wait, nurturing it with consistent contributions and patience, it grows into something strong, a robust source of financial security. The earlier you start, giving your investments more time to compound, the bigger your tree can grow, providing shade and security for years to come. It's never too late to start investing, even if you're starting later in life. The important thing is to take that first step, to plant that seed and begin the journey, so your money has time to grow and flourish, creating a brighter financial future for you. Why do you want to invest? For most people, it's about reaching big life goals. You might want to buy a home someday, retire comfortably, or simply have the freedom to do what you love. Clear goals give you direction and purpose with your money. Start by thinking about what you want. Maybe it's traveling the world when you retire, sending your kids to college, or owning your dream house. Write down these dreams. Being specific helps you figure out how much you need and when you'll need it. Once you have a goal, you can make a plan. It's like planning a road trip. You pick your destination, check a map, and plan each stop along the way. Your goals will shape how much you save and where you invest. Remember, even the biggest goals become possible when you break them into small, simple steps. Most people work hard for their money, but there's a secret. Your money can work for you too. When you invest, each dollar you save can earn more dollars. Think of every dollar as an employee. The more employees you have working, the more they can earn together. This is called making your money work for you instead of just working for money. It's the key to building wealth over time. Wealthy people use this strategy every day. They don't just save, they invest. You don't need a lot of money to start. Even small amounts grow over time thanks to the power of compounding. The money you invest today works hard, and its earnings start working too. Over years, this can turn into a lot. The sooner you start, the sooner your money becomes your hardest working employee. Before you even consider investing and potentially growing your wealth, it's absolutely essential to get your financial house in order. Think of it as building a solid foundation before constructing a skyscraper. Without that strong base, the whole structure could be at risk. First, make a simple budget. This is the cornerstone of financial stability. Start by listing your income, all sources of money coming in. Then, meticulously track and list all your expenses, no matter how small. This detailed overview helps you see exactly where your money is going every month, providing valuable insights into your spending habits. With this knowledge, you can then find areas where you can consciously spend less. Are there subscriptions you don't use? Eating out too often? Cutting back on unnecessary expenses allows you to free up funds so you can save more effectively. Next, and this is crucial, focus on aggressively paying off high-interest debt. Prioritize debts like credit cards, which often carry exorbitant interest rates. Debt with high interest acts like a silent thief, constantly eating away at your potential wealth and hindering your financial progress. Therefore, make a solid plan to pay it down as fast and efficiently as you possibly can, freeing yourself from its burden. Now, you don't necessarily have to be completely debt-free to start investing, but strategically getting rid of high-interest debt before diving in is almost always a smart and financially sound move. After establishing a budget and diligently paying off high-interest debt, make it a habit to save a little bit each month, no matter how small the amount. Your primary aim should be to build a dedicated emergency fund. This is money specifically set aside in a readily accessible account, designed to cover unexpected life events that inevitably arise. These events could include something like a sudden job loss, or an unexpected and costly car repair that you hadn't budgeted for. Aim to save enough to cover 3 to 6 months of your essential living expenses. This is generally considered a good goal to strive for. So, with a well-defined budget in place, a significant reduction in high-interest debt, and a growing emergency savings fund, you're finally in a solid position and ready to confidently begin your investment journey. You don't have to be a seasoned financial expert to begin investing. Many people feel intimidated by the world of finance, but it's more accessible than you might think. There are simple, easy-to-use investment options that anyone can start with, regardless of their prior knowledge or experience. These platforms are designed with beginners in mind, offering intuitive interfaces and educational resources. One great choice for beginners is index funds. They are a cornerstone of simple and effective investing. These are essentially baskets or groups of stocks or bonds that are designed to track the performance of the whole market or a specific market segment. Instead of trying to pick individual winners, you're investing in the overall economy. They offer instant diversification, meaning your money is spread across many different investments, and they typically have very low fees, which eats less into your returns. ETFs, or exchange-traded funds, are another excellent option. They are similar to index funds in that they often track a specific index or market sector. However, unlike index funds, ETFs trade like individual stocks on a stock exchange. This means they're easy to buy and sell throughout the trading day, just like any other stock. And many ETFs have very low costs, making them an attractive choice for cost-conscious investors. Both index funds and ETFs let you invest in a wide range of companies at once, providing built-in diversification. This diversification is key because it lowers your overall investment risk by spreading your money across different assets. Retirement accounts are another smart choice, especially for long-term investing. In the United States, these include employer-sponsored 401(k)s and individual retirement accounts or IRAs. A significant advantage of these accounts is that they let your money grow either tax-free or tax-deferred, depending on the type of account. This tax advantage is powerful because it means you keep more of your investment gains over the long run, allowing your wealth to compound faster. If your employer offers to match your 401(k) contributions, always take full advantage of it. That's essentially free money that your employer is giving you to invest for your future. When you're just starting out, it's best to keep things simple. Start with just 1 or 2 well-chosen investments. You absolutely don't need to try and pick individual stocks, especially when you're a beginner. That requires a lot of research and expertise. Instead, focus on long-term investing and let time and the overall market do the hard work of growing your wealth for you. Building wealth isn't about getting rich overnight. It's about doing the right things again and again, over time. The key values are consistency, patience, and a willingness to keep learning. Set up automatic investments each month, even if it's a small amount. This is called paying yourself first. Over the years, those small amounts add up. Don't worry about trying to time the market. The market goes up and down, but it grows over the long run. Be patient. Real wealth takes time. Most people who build wealth didn't do it in a few years. They did it over decades. Stick with your plan, even when things feel slow or scary. Keep learning. Read books, follow trusted experts, and ask questions. The more you know, the more confident and successful you'll become. The best time to start investing is today. You don't need a lot of money or perfect knowledge, just the courage to begin. Start with small steps like opening an account or putting aside a little money each month. Remember, everyone starts somewhere. Even the wealthiest investors began with their first dollar. What matters is building the habit and sticking with it over time. Celebrate your progress no matter how small. Set reminders to check your progress once in a while. Adjust your plan as you learn more. If you make mistakes, don't give up. Every step you take puts you closer to your goals. You have the power to build wealth and create a better future. Start today, keep going, and watch how your money grows.